So good evening, everybody. You're welcome to today's FX Outlook with Great White FX for the 18th of June 2024. So without taking so much of our time, we're going to start off with the economic calendar. So looking at the economic calendar for tomorrow, overnight, we have high impact news on the Aussie coming up as cash rate and rate statement. Then nothing during New York, during London. Then we have core retail sales and retail sales by 1:30 during the New York session. So we're going to have a little bit of volatility during New York session tomorrow. So as always, we're going to start off with the US 100. So we're going to look at what we forecasted over the weekend for US 100 and what the market has actually done. So let's get down to US 100. High impact news on Monday and both for beginning and it's just basically making new highs. So looking at the 4-hour on this bit, the possibility is that we might see a bit of a retracement. We can see that there's a body close above this high at 19,659. So we might see a bit of a retracement into this down candle, and probably a continuation to the upside on this pair. So if we look at the US 100, let's look at it on the 4-hour intraday. It seems there was a little bit of a retracement into this last down candle, as we can see, and that was what caused this spike. You can see there was a sharp move down and then price immediately took off. So this pair is still bullish. You'll be waiting to see what price does with all these fair value gaps. If it gives bullish evidence at any of them, the bullish run is most likely to continue. So we need to be aware of that. US 100 for now is still bullish. We're going to look at the dollar index. So let's look at what our outlook on dollar index was. The next we're going to be looking at is the dollar index. The dollar index has clearly shown where it intends to go. If we look at it on the weekly, we can see that we now have a break out of this consolidation, this last down candle. You see that price has been dancing within its range. So we have a close above that. And if you also notice on the monthly, we spike the monthly low and close back inside the range. So that means that most likely going forward, these equal highs at 106.50 might be the target on the dollar index. But if we're looking forward, before that on the weekly, that's on the monthly, I was looking at it on the monthly because this is the monthly time frame. This might be the target on the monthly. But if we look at it on the weekly, we have these highs still same here, but we have this rejection block here at 106.10 first. So going into this new week, the possibility is that where the dollar index is, which is this cluster area, we might see a bit of a retracement. So note this last down candle before this up move. If you go down to the 4-hour time frame, it's somewhere here. So you'll be watching for price to at least retrace into this zone, this fair value gap here. So if you look at the dollar index, that's where price is now. At that area that we highlighted, that's where price is now. And it's lining up with this area here. So as long as price does not close below this area here, the possibility is that we might see the continuation to the upside tomorrow. But if this place fails, then we might see a deeper retracement into this range before a continuation to the upside. So the dollar index is still bullish. What we're looking at is a downside retracement before the continuation to the upside. So that's what we have on the dollar index. So the next one we're going to be looking at is EURUSD. So let's look at the EURUSD and our outlook for the EURUSD over the weekend. bullish for now. The Euro USD, look at the Euro USD. The Euro USD is bearish, as you can see, close bearish on the weekly. If you look at it on the daily, we have a break in market structure here, but it has a long lower wick, which points to the fact that going into this new week, we might see a retracement to fill this volume imbalance. So you can see the volume imbalance, the first one has been filled. As you can see, price has already rallied and filled it. So we'll be watching to see what price does overnight. But the possibility exists that price may do this, may spike here, something like this, and might continue to the downside. But we'll be watching. If we get a 4-hour close above this high, that's this 4-hour fair value gap, then we know that price will be coming in a little bit deeper here before a continuation to the downside. So for this pair is still bearish. What you are looking at is a retracement for a move lower. So next we're going to be looking at is the GBPUSD. Look at the GBPUSD. What was our forecast for GBPUSD? Bearish. The next pair we're going to be looking at is GBPUSD. Also bearish, but not as bearish as the Euro USD due to the euro's weakness against the pound. So if you look at this, we had the bearish candle close on the daily. Let's look at it on the weekly. We have a long upper wick, which points that this might still move lower. So if we go to the daily, we had a sweep of this low and that's a weekly fair value gap. If we look at it, it's a weekly fair value gap here. We had a sweep and close back inside. So going into this new week, the possibility exists that we might see a steep retracement. Watch this level, 27.20 into the new week. You'll be watching that level going into the new week. So we might see a bit of a retracement, probably as far as here, this bearish order block, because this was responsible for the sweep of this area. So it might sweep up a bit before moving back to the downside. So price is at the first one. Price is at the first fair value gap. If we look at it, that's it. Price is just hit the consequent encroachment. That's the midpoint. So we might see a bit of a retracement, but it might still move a little bit higher before it starts moving back down. So if we look at this, you know, price is at the 4-hour consequent encroachment. If we move it up to the daily, because we now have a daily fair value gap, we'll be watching the 27.16 to 27.23 area. So for a rally, maybe into this consequent encroachment of this daily fair value gap and a move back to the downside. So if we put this here, let's use something to note this level here. That's the consequent encroachment of the daily. Then the 25%. Then if we drop back down to the 4-hour time frame, we move this our box to locate this 4-hour fair value gap. So we'll be watching it here. So if we look at it, price will be, those levels will be lining up with the lower level of this 4-hour fair value gap. So we might just see price rally up in here, bearish evidence, then you might take a short position to the downside. Somebody may say, what is a bearish evidence? It might look something like this, or it might just give you a bearish three candle formation, something like this, 1, 2, 3, 4. This is a bearish evidence you'll be looking for within these areas for a short position. The next pair we're going to be looking at is gold. So if we look at gold, looking at is gold. Gold is still bearish, but this low, let's look at it on the weekly. We see this is what we have on the weekly, but this pair is still bearish. we have this massive engulfing on the weekly, which points to the fact that we might see steep retracement going into the new week. If we look at it on the daily, this low was spiked by Thursday's candle. That was why Friday did this. So which means that most likely price might be coming for 23.41 first, then this before it continues to the downside. So it's bearish as long as price stays above 23.88. So what does that mean? If you go into the 4-hour time frame, it means that you might see a bit of a down move first and a continuation to the upside. So if you look at gold on the 4-hour, that down move has played out. And see, price is deep into that 4-hour fair value gap. That was what happened early this morning. So the possibility exists because if you notice, the 4-hour fair value gap price didn't close below it. And if we look at on the 1-hour, the 1-hour is looking like there is a break in market structure to the downside. And even if you look at the 1-hour fair value gap, there was no close, no major close outside of that 1-hour fair value gap. That's with much force because you can see this and this. So the possibility is that you'll be watching this low here, 23.15. Price may come down here. If it gets bullish evidence, then price may continue back to the upside. Why? The failure to close below here. So we might see price still try to move higher tomorrow before a continuation to the downside. What is going to change that view is if you get a move below here, close below here, then we'll be watching something like this for a move back down. But for now, the possibility exists that this might just be a down move and a continuation to the upside. So you'll be watching this level here. You'll be watching 23.15 to act as support and send price to 23.27, then all these areas. So the next we're going to be looking at is EURGBP. Looking at the EURGBP, let's see what we had last week for the EURGBP. The EURGBP is very bearish for now. It's very bearish. Although the weekly closed as a long lower week, rejection from this point here. If we move into the daily time frame, we can see that this is looking like a retracement. Looking into the 4-hour time frame, as long as price stays below 84.58, this may still move to the downside. But if on the 4-hour time frame, we get the close above here, that's 84.58, then we might be looking at a retracement on this pair. So you'll be waiting for something like this. If it moves, closes above here on the 4-hour, then you wait for this. Then we will then see. So we didn't get that close on the 4-hour. We didn't get that close on the 4-hour. So which points to the fact that this might still, we might still see euro weakness tomorrow. But I'll be mindful of 84.18. I'll be mindful of 84.18 because if this high was to have been a protected high, price would not have come up to it. So we might see a very deep retracement and then a second challenge of 84.58. So that's what we'll be having tomorrow. So we might see down move and a possible move back up to challenge this high again. Because we have what looks like a failed break to the downside. So the next pair we're going to be looking at is the pound yen. So the pound yen, we could say that it played to the script today. It played to the script today. The euro pound yen. The pound yen is still bullish, but it may be showing some bit of a weakness. Might be showing a bit of a weakness, which might mean that we might see a bit of a retracement. As you've noticed, there has been no body close above 258, no solid body close. There has been no solid body close. 1, 2, 3, 4, 5. So which points to the fact that if you look at this on the 4-hour time frame, we have a break in market structure here. So this may retrace. If it gets rejected within this 4-hour fair value gap, we might see price move lower. So if we look at it, we see price has moved deeply into it. So we'll be watching to see what happens during Asia session. Maybe they'll try to attack this 2050, this level I pointed at, this 254. If it gets rejected, then we might see that move lower. So that's what we'll be watching during Asian session. Then the last but not the least is the Euro Yen. Looking at this pair due to Euro's weakness against the pound, this has been clearly very more bearish than the pound yen. If you notice, it couldn't take out its previous high, couldn't even get there, while the pound took it but couldn't close but kept moving back. So this pair is still bearish, but we have a doji close on the daily, and this long lower week rejection from this daily fair value gap. So what they point to the fact is that we might see a bit of a retracement into this last set of up candles before a continuation to the downside. So if we look at the euro yen has played out to the letter. You can see that's where price is now. So price may still move up. The possibility is that this high may be swept before a continuation back to the downside. So we'll be watching that during Asia session and London to see what price does. So if price values gets rejected from here, because it is bearish as long as price stays below 170.29. Any 4-hour close above 170.29 with momentum would change our bearish outlook, and we might look for further continuation to the upside. So that settles it for this night. I thank you all for taking your time to attend. I wish everybody a beautiful night's sleep, and don't forget to join us tomorrow at 10 a.m. for the New York session. Thank you all for taking your time to attend, and good night.